Have you ever applied for a small business loan, felt confident, and then received that dreaded denied email from the bank? You're not alone. Hey, I'm Dennis Thompson's digital clone. Today on Cube Capital TV, we're breaking down the top 5 reasons banks deny small business loan requests, and more importantly, what you can do about it. If banks have told you no, stay until the end, because I'll also explain what lenders look at beyond just your credit score and how alternative funding may still be an option. Let's get into it. Reason number 1, insufficient or inconsistent cash flow. Banks lend based on proven repayment ability, not potential. Banks want to see 6 to 24 months of consistent revenue. Irregular deposits or seasonal income raise red flags. Cash flow must support both business operations and loan repayment. You may be profitable on paper, but if your bank statements don't show steady inflows, lenders see risk. What to do? Separate personal and business accounts, reduce excessive cash withdrawals, show stable monthly deposits. Alternative lenders often focus on real-time revenue, not just tax returns. Reason number 2, poor or thin credit profile. Banks rely heavily on credit history, especially for small businesses. Low personal credit score, high utilization, late payments or collections, thin credit file, not enough history. Even profitable businesses get denied if the owner's credit is weak. What to do? Pay down balances below 30% utilization, dispute errors, build business credit separately. Some alternative funding options care more about revenue than credit. Reason number 3, lack of time in business. Banks prefer established businesses, not startups. Most banks require 2+ years in business. Startups are considered high risk, no financial history, no confidence for banks. What to do? Start with smaller funding options. Build financial documentation early. Keep clean records from day one. Being new doesn't mean you're not fundable. It just means banks aren't your best first stop. Reason number 4, weak financial documentation. Banks want clear, organized, and accurate financials. Missing tax returns, inconsistent profit and loss statements, poor bookkeeping, personal expenses mixed with business. If your paperwork is messy, banks assume your business is messy. What to do? Use bookkeeping software. File taxes on time. Work with a professional. We help clients prepare lender-ready financial profiles before applying. Reason number 5, high debt or risky industry. Too much existing debt. Higher risk, high debt-to-income ratio, multiple cash advances. Certain industries are considered high risk. Restaurants, trucking, startups. What to do? Avoid stacking loans. Refinance where possible. Work with lenders familiar with your industry. We specialize in matching businesses with lenders who understand their industry. So to recap, the top 5 reasons banks deny small business loans are insufficient cash flow, poor or thin credit, lack of time in business, weak financial documentation, high debt or industry risk. A bank denial does not mean your business can't get funded. It just means you need the right strategy. If you're tired of hearing no from banks, Cube Capital Group may be able to help. Not sure where to start with your credit? We offer AI-powered DIY credit solutions and done-for-you credit repair. Link below. HVAC business owners, grab our funding toolkit checklist in the description to get funded fast. Subscribe to Cube Capital TV, like this video if it helped. Comment funding below or visit us to see what options. Until next time, stay funded and focused.